Let's bring in Siddharth Rajpurohit, who's a lead analyst banking and non-lending financials at Systematics Institutional Equities.
Good morning.
Good morning, Siddharth. I'll just start off with the basics. What do these Q3 updates indicate about the sector's outlook for FY26?
See, the fortnightly data that comes out was already indicating that the advances growth in the system is picking up after the GST cut and all has benefited the system. So from 10% year-on-year growth, say 4-5 months back, it has now come to for an average of around 11.5%. So this advances growth is expected to be hover around 12% by the year end because the large industries growth, which was at 1% some 4 months back, is gradually picking up and is now at around 5%. And retail is growing at a very healthy rate at around 10-11%. MSME is one sector which is pushing this growth overall at around 18%. So all segments are picking up after the GST cut and other things stabilize. So I think that overall industry level growth would be around between 11.5 to 12% range by the year end.
Hi Siddharth, this is Anushi joining in as well. So Siddharth, last year what we saw, if you just have to sum up 2025, it was a year of strong deposits as well as credit growth is what we are looking at. In fact, if you look at the PSU bank index also, that emerged as a top sectoral gainer. Out of all of these, we are seeing with about a 60% of a gain itself. For some of these names that we are looking at like Indian Bank, Canara Bank, etc. Just want to understand from you the overall picture, overall trends that we should be seeing for 2026 for a couple of these names versus 2025. What would be different this year?
See, the difference is that the year started with a slowdown of growth. The growth, which was say 13-14% year to year back, was kind of continuously slowing down. And March till the financial year ended till March, April, the year-on-year growth slipped down to around 10%. And deposits and advances growth kind of matched each other. So this was the scenario at the start of the year, and then gradually things started to pick up with the rate cut cycle playing out. Uh, and the push from the government side, RBI becoming less finicky about the CD ratio, providing more liquidity in the system. All these things started to benefit the overall banking system and credit started to pick up. And we are now seeing from 10% year-on-year growth that has come down to around 11.4, 11.5% year-on-year growth. So you're starting a year with a better year-on-year growth as compared to last year. So the momentum is good at this point of time. There is still no concern. The year also, the year FY25, calendar year 25, had those noises of a lot of unsecured kind of slippages. The microfinance was in pain, the unsecured credit cards was in pain, the personal loan was in pain. So all those cycles, all those sectors were kind of in pain at the start of the year. But now, as you if you have entered FY26, your MFI is kind of stabilizing, personal loan is already stabilized, credit card is stabilized, so unsecured segment is going to push up growth. So as this situation overall is better as compared to previous year for the banking system in terms of credit. Deposits is kind of lagging still. So your deposits growth is still at around 10%. So the gap is kind of widening. So banks which are sitting at better liquidity, means their CDs are not very stretched, would have more room for aggressive growth. So that bucket largely is the public sector banks, which are having that amount of room incremental to grow at an aggressive rate, and kind of they are growing. They are utilizing because they are growing their RAM segment.
Right.
They're kind of growing.
So Siddharth, if you just look at all of these banking updates that have come out with the Q3 numbers, just want to understand from you any particular ones which stand out, which you have your radar on, that you're excited about going ahead this year. So if you can give us your top picks in terms of the banking updates which are there, or even the other ones that you're looking out for.
So, see, most of the banks that have come up with their provisional numbers have shown a very strong rise. So banks have given, like Indian Bank is growing at around 14%. Okay. And many banks, UCO Bank and all, so the advances growth is kind of healthy for both banks, but a bank which is coming from a low base is what is Union Bank. It is coming from a very low base because it was not growing. It was growing. It was kind of growing at a very low single-digit sequential growth, and so that bank is now started to focus on advances growth. So this quarter also it has reported a very healthy around 4% sequential growth, which is in line with industry. So it was year-on-year growth for this bank was only around 5.5 to 6%. Now, as it sequentially move at or better than industry, this bank's advances growth will push up to at around at 10 to 11%, 12% going forward. So this bank is one which is on my radar and is amongst our top pick. Apart from this, the other two banks which I like are Bank of Baroda and ICICI Bank. So these are kind of top three picks for me.
Siddharth, I'm just going to jump in and I want to understand how significant is this pickup in advances compared to deposits? Like, does this indicate a strong credit demand or is it indicating liquidity pressure? What's your take on this?
Liquidity pressure is kind of there a bit because, see, deposits are a good source of your low cost of capital. Okay, so if you are not able to grow your deposits well, your credit growth would not provide you that much amount of your income because your spreads would be then in constraint. So liquidity is important, but deposit growth is lagging and it's continued and is expected to lag the system level credit growth. So that way, margins, but the lead lag effect of repricing of deposits is going to benefit the margins for the bank. But yes, for a better liquidity and a better growth, deposit growth has to pick up, which currently is a constraint in the system, and I don't see that improving a lot from here.
Right. I'll just ask you one final question. According to you, which segments, say retail, corporate, MSME, which of these are driving growth and do you see this growth continuing forward?
Corporate is kind of not growing because they are finding other avenues for their credit requirement, which are low cost, which banks are not able to meet their costs. So corporate is kind of the demand that they have is met by other sources rather than banks. So for banks, the corporate segment is not growing. MSME is one which is growing at a very strong rate, around 18%. So that is one of the key drivers of the growth. And then retail is there, but retail there are pockets which are kind of growing. But in retail, the unsecured component would kind of pick up going forward.